Jasjeet Singh. I'm an Associate Professor of Strategy here at INSEAD and also the Academic Director of the INSEAD Social Impact Initiative. Now, impact investing is a space that's generating a lot of excitement. A lot of funds are coming in, there's a lot of things happening. At the same time, the space is not without challenges. So here to tell us more about the space is Joost Bilkes, who's the Head of Responsible and Impact Investing for Credit Suisse in Asia Pacific. Welcome, Joost, and thank you for making the time.
Good morning, Professor.
Perhaps you could tell us a little bit on what is Credit Suisse doing in impact investing in Asia, and put it a little bit in the context of the longer journey Credit Suisse has had in impact investing.
Okay, so Credit Suisse has started 15 years ago with impact investing. The platform is about 3.3 billion in size. Several years ago, just over 3 years ago, we were assessing the assets that were sitting on our platform, and we acknowledged and saw that the assets coming out of Asia were actually small as a percentage of the overall assets. And at that time, we looked at, so first maybe from the investment side. So we said Asia, the opportunity set lies in more than 70% of all the poor in the world live in Asia. So you have a large portion of the BOP, the base of the pyramid in Asia, and you have issues around access to healthcare, access to education, to energy, to clean water. So all these demand pieces create an enormous interesting investment opportunity, and very scalable because of the number of people, there's the sheer numbers.
So maybe you could share a little bit about yourself. Have you always been in impact investing? How did you come in here? Why are you doing what you're doing? Because I imagine you could be running $10 billion mainstream funds. Why impact investing?
I feel that today, and over the last decade or even longer than that, I think companies are very short-term focused. And I just see that the problems that as society that we are facing are building up and building up. And I think it's specifically those large companies like Credit Suisse that can play an enormously important role in that transformation. To say, okay, we deploy capital in a profitable way, that's good for the business, it's good for the investor, it's good for our clients, but at the same time, it's actually addressing the major issues that we're facing from a social point of view as well as from an environmental point of view.
So can you say a little bit more about how you do sourcing of investments here in Asia? How do you come up with the right organizations that meet your sweet spot?
Yeah. So if we look at the investment solution, the Asian investment solution, so one of the key things that we said, okay, if we want to invest in small companies in the region, Credit Suisse makes normally very large investments. So we needed at that time to find a partner that had an excellent track record in investing in smaller companies. So we found a venture management, an Asian venture manager, and we partnered up with them. And they have a very wide network that they source deals from for their mainstream private equity suite.
So many people are not familiar with private equity, especially in the context of impact investing. Could you share a little bit on what are the different 4 or 5 stages of your investment process, perhaps illustrating it with a little example?
Absolutely, yeah. We just recently did a deal in blueberries, so I'll take that as an example. This was one of the deals that came to the table in the agri space. So it fits our model, which is the producer model, we call it, which is drawing the poor into supply chain as a producer. So this is a blueberry farmer we're drawing into supply chain. So that was the first step. Those were the first discussion. Is that really happening? In what areas geographically in China, etc. And then when we said, okay, this is interesting, then we went into the next step, which was more about the exploratory phase, and on the back of that, coming up with the exploratory memo, that would justify further due diligence and really going into the deal and spending more money on the deal to find out all the detail. And the exploratory phase, which was very important, for example, was assessing, okay, we're talking about an agri deal, but are we selling blueberries in the vicinity of Shanghai, or are we doing it 6 hours in Changrao or an area like that, 6 hours away, where farmers are earning a little bit on rice at the moment, And it's actually very interesting to make them grow blueberries. So those are the first discussions in that exploratory memo from the impact advisor point of view. And when that seemed to really make sense, and we said, well, actually, we can sell blueberries as raw materials to large buyers that might make blueberry muffins out of it, then it became interesting for us to proceed. And then we got into the stage that is the real due diligence, which is on the ground, all the assessments, interviewing a lot of farmers, trying to work out, just calculating, so what is their current income through their rice production? Is it a sustainable demand that we're creating for raw materials? How do we educate the farmer? What type of a breed blueberry? I tasted about 20 different type breed. I mean, there is a huge variety of blueberries, I can tell you that. And then towards the final stage, which is bringing it all together in the investment memo and talking with the different teams and bringing it to the investment committee to make a final decision. And then all the due diligence would have been done. And on the financial side, the impact advisor would have done all the work, and then we would come to a final decision to invest or not invest.
Can you say a little bit about, you mentioned earlier, you want to be pure in impact investor. What do you mean by that?
So I think there's a lot of talk. And I see a development that there's a lot of large institutes trying to enter the space, which I think is a good thing. I think it needs to be done. But it also brings in its challenges and its risks. Excuse me. And I think that if you really look at the type of businesses that we want to fund and we want to deploy capital in, we're investing in companies whereby the business model is a profitable business model, but at the same time is addressing these large social and environmental issues. And it's not that it's a nice to have type thing. No, actually the business model itself is making money out of solving these issues. So it's a very, I would call it pure way of looking at it. And it's an investment has all the intentions behind deploying that capital is to achieve that social or environmental outcome.
What's the role of impact measurement or evaluation in all of this? Because there's a lot of debates about what's the right way of doing it, how much to do it, how rigorously to do it.
It's more important that we're very, and to use the word again, pure about where are we allocating our capital. And is this a company, for example, a company that's producing nutritional supplements for infants, then the more this company grows, the larger it becomes, the more children it will be able to help, the more social impact there is. And yes, of course, I mean, you have to measure, have the intent, and that's what we're doing as well. We have baseline methodologies and et cetera, et cetera. But the key thing is, how do you enable a company to grow? And what are the key indicators to actually measure, track, and work together with the company to actually be successful? And it could be something like, it's in your distribution network, what's the quality of the end product in your distribution network, and how can you improve that? And how do you track that? And can you use technology to actually find out which product takes how long to get where and who's taking it, or is it being taken at all, and how do you measure that? So you have to live it before you can really measure it.
Yeah. What would be your career advice to MBAs seeking to break into impact investing and into social impact space more broadly?
So either you want to focus, I think, on content. So if I'm hiring resources for the initiatives we're doing, I'm thinking about, okay, I need somebody who's an expert in conservation finance or an expert in the healthcare sector. So actually content. So I think a lot of students are focusing on more generic capability. So I think you should, as a student, you should say, okay, what are the big issues that the world is facing in the coming 50 years? And if you do studies that are related to supply chains, for example, you can choose the agricultural space. It's a terribly interesting space. It's a terribly important space in terms of the social impacts, but also the impacts related to climate change. I mean, that problem is not going to go away. If you have somebody with deep content knowledge, that's very valuable. But it can also be in the renewable energy space. So I think what I say is, why don't you see if there are studies that you can do specifically related to developing your own content.
Can you share a little bit on where do you think you're headed after your first fund? Is there going to be a second fund? Is there going to be new impact investing opportunities in Asia? What are these?
Now, we also want to raise a next fund. So there's a couple of deals that we did quite early on in the fund, and now we're already assessing, okay, what are the exits? How should it look like? How is our impact lasting, and the influence we had and the way we shaped the company to grow further, how is that lasting? And we can get a sustainable exit. So the plan is late next year to start a second fund, so raising for the second fund. And it would be very similar. It would just be scaling up this capacity and this capability and make it more meaningful from a bottom line point of view for Credit Suisse in that sense.
Thank you for taking the time. It was a real pleasure having you at INSEAD, and looking forward to continuing to work with you.
Thank you. My pleasure.